Reverse mortgages sound great. No monthly mortgage payment, right? But before you sign the closing documents, here are the biggest risks and drawbacks to look out for if you're looking into getting a reverse mortgage. First, we have to understand what is a reverse mortgage. A reverse mortgage is a home equity mortgage product that taps into the equity that you have in your house. It is only designed for individuals 62 and older, and you do not have a monthly mortgage payment once you open up one of these mortgage programs. Now that we know what a reverse mortgage is, let's talk about some of the drawbacks around opening up a mortgage like this. Number one, you're using your home equity. When you open up a reverse mortgage, you are opening it up against the equity in your house, which means you have to have significant equity in the actual home. Either you have the house paid off or around 70% equity in the house or more in order to utilize the equity already in the home. As you open up the reverse mortgage, it's tapping into the equity and giving you payments. However, on the back end, there is an interest rate associated to this program, and the loan is going to continue and go up as time goes on. As the loan grows, your equity shrinks. This means less wealth for you or less wealth for your heirs when they go to inherit the property once you've passed away. Number two, you still pay taxes, insurance, and maintenance. When you open up a reverse mortgage, you maintain ownership in the home, but if you stop making these payments, you could default on your loan and get your house taken away. So even though you don't have a monthly mortgage payment, you still need to make sure you're maintaining the property and paying those associated fees. Number three, reverse mortgages aren't free money. This is a mortgage product and there's lots of parties involved, which means they have to get paid for doing their job too. There are closing costs and fees associated to opening up a reverse mortgage, and they can be a little bit higher than most because you're opening up a home equity mortgage that's tapping into your equity that is a little bit different from other mortgage programs. Fees, closing costs, and mortgage insurance, it all adds up. Many borrowers or clients don't realize how expensive it can be sometimes to open up a reverse mortgage. Number four, your heirs may need to sell the property. If you own the property until you pass away, your heirs will become owners of that home and they need to pay off the reverse mortgage at that point in time or refinance out of it. A lot of the times heirs will decide to sell the property because even with a reverse mortgage, if your loan balance grows over what the actual house is worth, you still do not have to pay back over the actual market value. We see a lot of people choose to sell the property because they don't want to maintain the property after their family member has passed. There's a lot of emotions and a lot of stuff inside the house that they already have to deal with that it just doesn't make sense to maintain the property. But you do have that option to refinance instead of selling to retain ownership in that property if it makes sense for you. Number five, moving out triggers repayment. What this means is if you open up a reverse mortgage and you decide that you want to move closer to family or you need to downsize or upsize and you decide to move out of the property, well, the reverse mortgage cannot be associated to an investment property. You would either have to sell the property or refinance out of it in order to pay off the actual reverse mortgage, since it can only be used for primary residences. So as you can see, a reverse mortgage isn't a scam, but it's also very complicated. Know the risks, run the numbers, and get expert advice before you open up a reverse mortgage. If this video is helpful, please like and subscribe. If you want some numbers run to see if a reverse mortgage makes sense, please comment down below or reach out to me directly. Let's continue to help people understand that reverse mortgages are not scams. They are just complex mortgage products that not many people understand. Thanks again for watching. I'll catch you on the next one.